Welcome to The Explainer. Okay, let's just dive right in because we're currently standing at the very edge of a massive $100 trillion currency crisis, and it's unfolding entirely under the radar. But here's the kicker. Despite all the dramatic headlines you've probably been reading over the last couple of years, this is absolutely not the crisis everyone expected. It's actually much, much stranger. We're talking about a tectonic shift in global wealth. So today, we're going to break down the real, immediate threat to the global economy. For years, right, we've heard the exact same doom and gloom story. The US dollar is going to lose its reserve currency status, nobody's going to want it, and it'll just crash in a fiery heap. But what if the much-feared dollar reset isn't a crash down, but actually a violent spike upwards? It's wild to think about, but the dollar's safe haven status is acting in a completely counterintuitive way right now. It's totally subverting that mainstream narrative that a global reset automatically means a total collapse of the dollar. So the mainstream myth insists the dollar is simply going to collapse under its own weight, that the world will just wake up one day and abandon it overnight. But hidden in the macroeconomic data is a pretty terrifying reality. The dollar reset has actually been triggered, and it is crashing up. It's getting stronger at a truly staggering, unprecedented pace. And actually, that runaway strength is exactly what's threatening the structural integrity of the entire global financial system. To see this in action, just think about the recent peak of 101.3 on the DXY. For those of you following the markets closely, you know the DXY measures the dollar against a basket of major foreign currencies. But what's absolutely staggering here is the sheer velocity of the move. The dollar basically went straight up. I mean, it was moving more like a volatile tech stock than a stable reserve asset. And as a direct result, currencies like the Indian rupee or the Korean won have just been hammered straight down. So the big question is, why is this massive, relentless surge happening in the first place? Well, the underlying catalyst driving this whole runaway train is the interest rate differential. Basically, the gap between the interest rates of two different central banks. Recently, escalating conflicts in the Middle East spiked oil prices to over $120 a barrel at one point. Markets, and more importantly, the Federal Reserve, saw that massive energy spike as highly inflationary. So instead of the interest rate cuts everyone was banking on to relieve the pressure, suddenly the market panicked. They started pricing in rate hikes. That widening gap, or even just the expected gap, between high U.S. interest rates and struggling foreign central banks, that creates a massive, irresistible tailwind for the dollar, just pushing it higher and higher as capital flees to America for safer yields. Now, I can already hear some of you asking, hey, I only care about U.S. gas and rent. Why does global FX matter to me if I live in the States? And it's incredibly easy to think global foreign exchange markets are just these abstract concepts that have nothing to do with your daily life. But taking that myopic view is a huge mistake. I promise you, these seemingly distant global numbers are going to connect directly to the price you pay at the local pump. And honestly, the underlying health of the entire American economy. Because, well, when the world breaks, the shockwaves always come home. To really understand why, we need to redefine the petrodollar. The crucial point here is what we call the petrodollar trap. Usually, people just think of the petrodollar as foreign nations selling oil and dutifully reinvesting those profits back into U.S. treasuries. But the brutal fine print is that because almost all crude oil globally is priced in U.S. dollars, every single country needs dollars simply to buy the energy required to keep their lights on. It's not just some reinvestment scheme. It's a daily, high-volume survival requirement. If you want oil to run your factories and fuel your trucks, you need U.S. dollars, period. Let's use Japan as a prime example of how devastating this math gets in real time. Because the US dollar is soaring, the Japanese yen is depreciating rapidly against it. But here's the thing. Japan produces virtually no energy of its own. They still have to buy their imported oil in US dollars. The mathematical result is just brutal. The cost of oil for Japan is skyrocketing. Even if the global price of a barrel of crude stays completely flat, the fact that their local currency has lost so much purchasing power against the dollar means their energy costs are just absolutely exploding. This traps Japan in a literal doom loop. Okay, so step 1, oil is priced in dollars. Step 2, a dropping yen makes energy insanely expensive for regular Japanese citizens and businesses. Step 3, in a panic to prevent economic riots, the Japanese government steps in to subsidize wholesale gas prices by printing more yen to pay their refineries. But then, step 4, those refineries just take that extra printed yen and dump it right on the open global FX market to buy the dollars they desperately need for crude. That just floods the market with yen, which mathematically drops its value even further against the dollar. It is a self-feeding cycle of absolute destruction. which brings us to a breaking point: 160. Every time the yen hits 160 to the dollar, the Bank of Japan outright panics. They desperately intervene by burning through their own precious US dollar foreign exchange reserves, selling dollars and buying yen to try and halt the collapse. Think about how rare and extreme it is for a major G7 central bank to burn through its own reserves this fast. I mean, they've even raised their overnight rates up to 1% to try and slow it down, but the global market just smells blood in the water. The market sees it as an act of desperation, and the currency continues to hemorrhage value. To really ground this foreign exchange crisis in reality, just imagine your local gas prices going from $3 to $5 to $8 to $12 to $20 a gallon in a matter of months. Just think about the absolute economic destruction that would cause in your own life, to your grocery bills, your commute, your ability to heat your home. That level of intense, suffocating pain is exactly what is happening to countries around the world right now, places like Japan, India, and South Korea, as they slowly but surely run out of dollar reserves to defend their currencies. So this leads us to the ultimate question for our explainer today. If the US dollar is so incredibly strong and literally winning out against everyone else in the world, why does this eventually destroy the US economy? Like, why isn't a strong dollar a pure victory for America? It seems entirely counterintuitive, right? Well, to answer this, we actually need to zoom out and look at the anatomy of an empire. To understand the macroeconomics of today, we actually have to take a trip back to 1200 BC, to the Egyptian Empire under Ramses III. At the time, Egypt was a thriving, incredibly wealthy empire. But then, a massive group of pirate invaders known to history as the Sea Peoples arrive on the scene. Ramses is a brilliant tactician, right? He lures them into the Nile Delta and actually defeats the Sea Peoples in a massive battle. He wins, but then he realizes a terrifying truth. The Sea Peoples had already decimated all the other towns and cities on their way to Egypt. They completely destroyed Egypt's entire network of trading partners. And without anyone left to trade with, well, the Egyptian economy completely collapses anyway. Just like those Sea Peoples destroyed Egypt's trading partners back in 1200 BC, today's ultra-strong US dollar is systematically destroying America's global customers. The United States relies heavily on global trade. We export goods, technology, and services to Mexico, South America, Europe, Asia. If foreign economies are crushed by the sheer strength of the dollar and their own exorbitant energy costs, they go broke. The US might win the currency battle, sitting on top of a mountain of strong dollars, but it loses the economic war because it completely loses its customer base. This brings us to the mechanics of the endgame. Think of a massive global exporter like Toyota as a proxy for this collapse. Toyota manufactures cars, sells them to the US, and in return, they earn dollars. But if the global economy slows down and global customers go broke due to the strong dollar, foreign exports to the US suddenly halt. That means the flow of those crucial dollars abroad completely dries up. Toyota isn't earning dollars anymore, so what do? They have to drain whatever remaining foreign exchange reserves they have left just to buy oil to keep the lights on, which just accelerates the doom loop on a global scale. Which leaves us with this final, really powerful thought. Are we prepared for the true dollar reset? A reset where America's currency doesn't crash down in a fiery collapse, but instead spikes so violently upward that it becomes the very weapon that bankrupts its own global empire. It completely flips the traditional narrative on its head. The impending crisis isn't a weak dollar. It's a dollar so terrifyingly strong it breaks the world, and eventually itself. Thank you for joining me on this explainer, and I really hope this gives you a completely new perspective on the forces actually driving the global economy.